Good evening. I'm Giuseppe Basile. I'm the analyst and trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker Twitter handle. Good evening. Today is Sunday, December the 15th, 2013, and in this video I'm going to review for you four markets: the euro-dollar, Forex, the dollar index, the S&P 500 E-mini, and the gold futures E-mini. This video it's only for my newsletter subscribers. If you want to subscribe to the newsletter, that's for free, and you can go to my website, and on the left side there is a registration link, and you can receive excuse me, this newsletter every weekend. I also post every now and then some weekdays updates when something important is happening in the market. So it's good to have the free subscription to my newsletter. So let's start from the euro dollar. What you see on the screen is the weekly chart, and those who follow me know that I've been timing since the beginning of February this year. This measured move here. Price never got below 126.80, and we had participation 3 times at this level with program trading pushing prices higher. Those who follow my work know that I try to model program trading, which is a class of algorithmic trading, and this very powerful class of algorithms, and they actually move the market when there is no outside interference with the market, which could come from central banks, could come from economic conditions, fundamental economic conditions, could come from, in the short term, from high frequency trading activity and news. Most recently, and actually I did this on November the 7th, actually real time online, while I was having an interview with Dale Pinkerts at the live analysis room on NFX Street. We saw participation at this 133 area here, and as you can see, both the setup at 128.80 area on the identified on the weekly time frame, as well as this second setup long, they have the first target around 141, and I've been pointing at that level now. It's actually a few months, 10 months, and where I see this market moving. So moving to the daily chart, then I want to show you the setup that we saw in correspondence of which we saw participation on Friday, and this is an extension long, and as you can see, I've traced this, and I've sent this level 137.20 level. I've sent that to my subscribers on Wednesday, December 11th, and so 3 days before, and on Friday we had this participation on the upside, which means that program trading is actually looking at this level at the moment, and there was an initial participation. So if you got into this trade, you could actually get into 137.20 and put a stop below 136.92. So I anticipate a continuation higher. Some people will call the double top here, but we are just following our sequence of measured move, and until that sequence is broken, that's the high availability and high reliability path, which at the moment is on the upside. So just continue and keep the position until we see this trade working or this level broken. If this level is broken, then we will need to reevaluate and again there will be program trading pushing this price lower. Now I do not anticipate that, but that's the market can do anything, so we need to take that scenarios, keep that scenarios in mind. Moving to the dollar index, I want to show you the weekly chart and trays and levels that have been respected now for years, we can say, and we had this measure move lower, which could be traced at the beginning of 2011, and it has been it provides this 84, 90, 85 level here, which has been respected now 4 times, as you can see. I say that this is the level that Ben Bernanke is looking at. I mean that every time price gets above this level, then the amount of dollars that are printed magically increases, or added to the economy magically increases. So clearly the US is doing a very good job in trying to in maintaining the price of the dollar index, and so which means the dollar versus all the majority of the other forex values low, which actually helps struggling economy in US. But to me, the fundamental interpretation, it's not very important. Look at price here. We show this participation on the downside, which means that, and that's the only thing that is important to me, that there is program trading participation on the short side at these levels. And we have target well below 176.28, around 71 or 72. And that's where we could see price of the dollar going forward. Anyway, we could see at least the 76 level. Now, on the daily, there is not really a lot to say for this market, and I prefer to look at the euro dollar, which has more volume. If we speak about the futures contract, the dollar index contract does not have a lot of volume. 30,000 would be the average, but still we can trace this measure move. Measure move here, this in the sequence, and as you can see, we have participation on the downside at 80 with a target at 79.60 if you trade this market. If you have to trade this market, I suggest you trade the euro dollar because there is more activity and volume on in the future contract. Moving to the SP500, we know that this market is now in a measure move in daily moves lower. We know that because we reached the second target, and actually to the tick we reached, and start selling on the second target of this measure move long, and we had participation 1721, and then we again participation at the second target at 1813 in the old December contract. Now what I'm showing you here to you is the daily chart of the continuous contract with the contract aligned to March 2014 expiration, and so there was profit taking here twice. The first time the market went to meet this increasing 20-day moving average, and there was someone buying there, including program trading on the smaller time frame, 15 minutes and 40 minutes, and 20-40 minutes. And as soon as that move higher ended, then we start seeing this we saw this move lower. Now Where are we going? We are going to the next level of support on the weekly, and this is an extension, and that levels comes at 1737. How are we going to get there? We don't know. What I can anticipate is that SP500, it's very clunky. It likes to retrace a lot, as you probably know if you have followed this market for long enough. And there could be a very good opportunity here for a rally and sell at around 1786, I believe it is. Let me read. Yes, with a stop above 1791. This is a 5 points stop, right? And see where it brings price. It brings price. It has two. This setup would have two setup. The first one, unfortunately, the first one would be at 1755. Two targets. The first target 1755. 1756, and the second would come at the 1739, 1740, very close to this next level of support, right? So what can we do here? If we see a retracement into 1786, you might have 5 points risk entry here with a potential for 45 points, which is actually a ratio, reward to ratio of 9. So it's not a bad trade to take. So be very careful here. If we go above 1790, we are still going to move lower. Just you might get hit here. So one way to trade this kind time this kind of trade is to wait that the sequence of measure move on the 15 minutes or 40-hour minutes higher here that we're going to see next week ends, and then we can actually take the position that brings price lower. Moving finally to gold, everybody here is probably calling for a double bottom. I don't know, that was what I would anticipate, but very quickly on the weekly we actually have a very important level here, and we retested that. So we need to, if we draw from lows of 2002 to highs to all-time highs here, we see that there is participation, and the reason that there is participation is because we touched the 1233 level and we dipped a little bit into it, but basically there is potentially participation there. So yes, there is a possibility that we continue higher here, but I need to see confirmation, and I have a very clear and clean way to look at confirmation. On the daily chart, we are in this sequence of measure move. Look how nicely the price was rejected in this 130, 1342, 1364 area, and then came into this 1207, and actually I called this level with a few weeks in advance. And now we are going to trade into the next level before we can say that this was a low. And actually what I anticipate is participation on the downside at 1284. And if we move above the stop loss 1303, 1304, then we can actually confirm this as a support, but we don't know it just yet. So it's not easy to enter this trade on the long side. This would be a counter trend trade for me, and what I'm looking for is to see whether there will be participation at 1284. And this is it for this the first video. I have 2 more videos to record and to send to you. If you want to see these videos, go to my website fibstalker.com and subscribe for the Fibstalker free newsletter. And I'm going to send these videos to you every weekend, and also daily, weekly, weekdays updates. Have a great Sunday evening, and I wish you a very good trading week next week, and chat to you soon. And please go and visit my website. There's a lot of free information and material there you can use to understand the way I trade. Bye now.